Yeah.
All right, good morning, Chamber of Commerce. I'm Liz Hartman from the Lake Oswego Chamber. We're happy to welcome Rick Skayhan and Dennis Warneke today to tell us about insurance for chamber members. And go ahead and introduce yourselves, and then we'll go around the table and on the screen.
Sure.
Okay.
Go ahead, Dennis.
I'm Dennis Warneke. I've been a very long member of the Chamber of Commerce. Trying to think, I think I moved here like in '99, so became a member shortly after that. And I'm here to help Rick. And go from there.
So I'm Rick Skayhan, the CEO of an agency here in the Portland area called AHP Advisors. Our specialty is working with association programs. So one of the projects that we initiated in August, September of last year was a project that came from the Chambers of Commerce. Many of them were unhappy with the offers that they were getting from different places. So a number of chambers came to us and said, could you put together a program that would allow us to get access to small business style plans, but be able to get them at a lower rate than what we can get for ourselves? And that's exactly what we've gone and created. So from a provider standpoint, one of the things that came back to us is we wanted to make sure that we had a large provider network. So currently we primarily partner with United Healthcare here in the Portland metropolitan area. That gives us direct access, in-network access to Providence facilities, legacy facilities, OHSU, Adventist, Salem area. We have Salem Hospital and also a regional network and a national network for United Healthcare. So if you've got employees that are in Austin, Texas, or New York, or Washington, DC, they would still be considered in network and they get access to UHC's national network to get it. Or when you're traveling, and one of the main difficulties that we have today, especially in the self-employed space or individual and family plans, is that much of the coverage ends at the Oregon state border. And you literally don't have the coverage when you go and travel. So if you're, say, in Eastern Oregon and you're traveling to Boise, you can get emergency coverage, but you're not going to have in-network coverage. With what we call group plans, which are these designs that you're hearing from us today, those plans then directly allow you to access to that in-network all across the United States. And it's about 1 million physicians and about 5,000 hospitals across the country. So we wanted to start with that because that was the demand that was coming to us from the Chambers of Commerce as we go to build this out. Second part is that we kind of went into was the fact that they wanted to know, well, am I going to be restricted by plan choice? Meaning, what type of plans am I going to have available that I can offer to both myself as an owner and to my employees? So one of the things that we did is we created an array of different styles of plans. Most plan designs, and you'll hear a little bit from me here today, and feel free to stop me or put something in the chat if you need to. A little bit about Insurance 101. So there's two different styles of plans that most people are used to. They either see what we call copay plans, which is I'm going to go to a physician, I'm going to go to a specialist, and it's going to cost me $25 or $50 or whatever it's going to be. Those are what we call copay plans. And so you have a certain number of things at the front end of the services you receive that are these fixed dollar copays. Then if there's, say, an outpatient surgery for your hand or something like that, or a pregnancy, now you have outpatient or hospitalization. That usually becomes what we call co-insurance. And that's what we call a percentage split between what the insurance company pays and what you pay. And then both of those all of that is connected to something we call a deductible and out-of-pocket max. Deductible, we're fond, and Dennis will probably use the same kind of terminology that I do. We like to call the deductible the floor. And we call the out-of-pocket max the ceiling. And so what you get is when you have a major event, could be outpatient, it could be hospitalization, you're going to pay those first dollars up to that space of where you get to the deductible. And then after the deductible becomes that percentage split. Sometimes it's 80-20, sometimes it's 70-30. 70% or 80% paid for by the insurance company, 20%, 30% paid by you. So as all of those different costs go into a bucket, and you start to get it, you start building all the way up to where you finally hit what's called the out-of-pocket max. And that's where, if you're going to in-network providers, that's why you hear me use that term, the in-network providers, once you hit the out-of-pocket max, the insurance company's not paying 100% of everything. So you kind of know where your financial exposure is. And that's what we as consultants try to do with all of our employers, is we work to be able to help you understand and say, well, let me look at my financial exposure here. I'm fond of using the term, that was a senior director of a health insurance company. I'd sit around a boardroom and people would ask me and say, well, we're in the healthcare business. And I said, no, actually, you're not. I said, you're in the banking business. I said, because that's really the focus that you have, is that your job is to finance healthcare. Providers provide the healthcare. I said, we just finance it to kind of do that. So I always want to encourage people to look at this in a way to know that what you're really building here is a financial firewall. Exactly what you already have with auto and home and other things. It's to set that up in such a way so that if you have a catastrophic event that you didn't know was coming, cancer, stroke, heart disease, anything like that, you have the ability to protect your family's assets for what you need to have. So in the plan models that we have created, the other bucket that we have, so here's the copay bucket that we have that are here. The other one are what are called healthcare savings accounts. Now, those were created about 20 years ago, and they're a two-part insurance piece. One part of it is the insurance, actually, that covers you on what you need to have. The other part is a bank account. And the IRS, when they allowed these to be created by Congress, allowed for the fact that you could take money out pre-tax, much like a 401k, and you could put money over into this healthcare savings account. Now, why did they do that? Well, there's a statistical reason for it. 80% of us in the United States spend about $5,000 or less on our healthcare annually. So the more that first $5,000 you take on yourself for your own personal risk, the more the cost of the insurance goes downward. So the more that you take on that space, the less it's going to cost. And so when you're making comparisons between what style plan I should be selecting, you're then looking and saying, well, wait a minute, if I'm going to pay this much for this style of plan, but I pay this much for this style of plan, am I willing to accept that first part of those dollars to make that work for me? Because then what you're saying is you're taking some of the money off the table from the insurance company, and you're saying, I'm going to pull that back to me. I'm going to put it in a bank. Now, if I need it, I can go get it. And it's all pre-tax, so it's not considered income. And then I'm going to use it if I need to. The good part of it is, especially with HSAs, is the fact that you can keep adding to it all the way up to age 65 when you finally decide you want to opt for Medicare. So now you're piling all these dollars up. And then by the time you get to Medicare age or Medicare eligibility, you then have the ability then to use those dollars to pay for your Medicare Part B and your Medicare premium. So you've basically created a fund for yourself into that space. So we do a lot of that in these designs. So what you see from this program that we have, currently right about 15 plans, copay plans and HSAs, and some are really quite good. We'll have Liz send this out to everybody so that you've got this electronically and you can take a look at it. So while we predominantly work with United Healthcare, there are times where United Healthcare doesn't exactly fit. So we also have a basket of other insurance companies that we work with that we can opt to if we have to be able to bring them in. They're all through the chamber program. So all this is available through the chamber program. And so you will have working with us. And Dennis is our agent in this region that we'll be working with. So anybody who's here in the Lake Oswego Chamber can contact Dennis. Dennis has direct access to all of our information and all of our stuff. And then we will provide him the quotes, and then Dennis would then be able to sit down and walk people through the plans and do exactly what I just said, which is to opt for that. Do you want to add anything there?
I think you've given them a lot of information there.
No problem. So been here to do this. So the last part is,
Excuse me, if I could just
Sure,
say one
yeah.
thing since you asked.
absolutely.
I have been in the insurance business. I just retired May 31st after 50 years. So I've been around. Most of my last 2 or 2.5 decades was specialized in health insurance for businesses. So there's a lot of businesses around that have already been my clients and et cetera. So I know what I'm doing in this area, and just wanted to make sure you understood that, and that I can help you. Thank you.
No, that's great. So the program itself currently, well, the Lake Oswego Chamber that become involved in this program with us, we currently have about 12 to 15 chambers that are already involved. And I think within the next 30 days, we'll be at 20. So we have developed this network and this common space for all of you to work together. I mean, one of the things about association programs that is really, really good is the fact that you're all working together to create a whole. So rather than standing out there in the meadow all by yourself, you've now got hundreds of other allies that are working with you to then be able to let us negotiate directly with the insurance companies and say, here's what we have, here's our block of people that are wanting to get coverage, and this is what we want to go do. We're also usually in communication with clinics and hospital systems about how we can help improve the healthcare delivery system to get done. I mean, one of the things that we concern, not as much up here in Portland Metro, but in many of the rural areas of Oregon, we have what we call primary care deserts, where we have serious problems where people have access to primary care. I have a food manufacturer currently on the west side, about an hour out of here, of this area, and they've got hundreds of employees. They have to overstaff because the nearest primary care that their employees can get to are a 45-minute drive. So they have to carry more people there every day. So they're paying more staff because they don't have the primary care access to be able to get somebody taken care of. So we are constantly in touch with everyone to be able to try to help figure out where those are and how we can then find ways to be able to help and improve it. Okay, so it's kind of some nuts and bolts of how this process works. So if you're interested in wanting to get a quote, and you do not have to be a member of the chamber to get a quote, but you must become a member of the chamber in order to enroll. So that's the agreement that the coalition has directly with the chamber. So then that way, if there are people that are interested or may have left and want to come back, they could take a look at this. But the whole idea is to be able to provide a value add for existing members, existing paid members, so that you can get there. And then prospects who want to be able to come in and say, hey, this is pretty good. You know, this is a reason for me to want to be, not only do I want to be part of my community and part of the business community in my area, but this also is an incentive for me to say, if I'm going to save money, I should be part of this in the first place. So kind of a twin deal to make that work. So the way in which this works is if you're interested, you would contact Dennis. You can contact me directly, but I would encourage you in this area to contact Dennis because he knows. So you would contact Dennis. He will gather the information. He'll send it to us. We get the quote. We send it back to him. He comes out and he sits down with you to have that discussion. Now, under the special rules that we have for this particular program, if you are an employer in which you have 4 or less enrolling folks, then we have a different set of rules that we have to operate by. If you already have something that's already in place and you are 5 or greater enrolled, not a problem. Then you just send us the information, we take a look at it to go. If you're 4 or less, and I want to get into that here in a second, there's a reason why we do this. Number of years ago, we were involved with a number of other insurance companies in the state. There are 2 different places where insurance gets delivered specifically to small businesses. One is what we call the fully insured space. Fully insured space is, you see all the state licensing, and you may have seen some things here in the news about insurance companies that are now pulling out of certain particular areas. Providence is one. I mean, they're just going to end and dissolve by the end of the year. Those are what we call the fully insured space, because they have to file their plans and their rates with the state of Oregon and then be able to have those specific. The other side is what we call the self-funded space. And the self-funded space is where we have more creativity that we can do. So in our conversations with the insurance companies, it was obvious that for us, that because of some of the handicaps that were put within the fully insured space, it was better for us to move all of our employers over to a different space. So we did. And so all of our plans are what are called level funded. They're on the self-funded side of the scale, but they're slightly different. The level funding walks and talks exactly like fully insured. You already know what your rates are. Once you agree to come into the program, your rates are locked for 12 months. Quick sidebar here before I talk more about level funding. Always know that with insurance, you pay, you get, you don't pay, you don't get. So you're not locked in, even if God love our brokers, but if a broker tells you and says you're tied into this for 12 months, you are not. You are never tied in. You can always change. You can always quit. You can always stop. You're not required to have to run it for a 12-month period. So if you started this program and you said, Rick, this really is not working well for us, is there a way we can do something different? Because we just can't make that work. You can. So back to level funding. So one of the interesting things about level funding is the fact that while it looks exactly like fully insured, your rates are locked in for employee and employee and spouse and employee and kids, employee family, while those rates are locked into that space, there is a possibility that you may pay more in than your as an owner or your employees paid out in claims. That difference is called a surplus. So, example, we had a client last year who was with the program all throughout 2025. They are a group of about 45 employees. They just got back. The way this works is they run for the entire year. The insurance company can then work with us. We're watching all the way through the entire year, how much they're paying in and what they're spending in claims. So everybody can see this. I mean, all of you every group that joins gets to see this on a monthly basis. So it's complete transparency. That's part of the design that we had here, is to be as open and transparent as we can. So when you're taking a look at this, you're watching all the way through. So they go all the way through the end of the year. They come around, they do their renewal, and they ended up with a fairly low renewal. It's about a 10% renewal. And so then in April, because of that credit they received, they get back 50% of what they had saved. And so that check was for $37,000 on a group of 40. That's pretty significant. They were absolutely shocked. They had another one, they're a little group of 3, and their savings was about $2,000. And they were stunned. They called our office and they said, "I don't understand, how come we had no bill in April?" They said, "Well, because your credit was applied to your premium, so therefore you're not having to pay for that month." So it's one of the real benefits of the level funding structure that we use for this program, which is then to be able to help to give an incentive to come back. Some of you already know this, because if you have safer workers' comp, there's money that comes back into that. So it walks and talks exactly in the same way. So I just kind of wanted to emphasize that that's a possibility that's there. So, and again, because of the transparency that we structured into this, every single employer who's participating in the program has the ability to go in and look at this every month. Now, it masks who it is. So if you've got employees, it doesn't tell you, "Oh, George is the one who went down to the hospital system." It doesn't say that, but it does show what the claims were that were occurring, that were going on, that would be that case. So you don't know who the employee is or employees that have gone in to use the services, but it lets you track to see what you're going to end up looking like once you get down towards the end of the year, because then at that point, well, do I want to renew with this organization and this particular insurer, or maybe I don't. Maybe I'm not happy with it. I want to be able to move. One of the frustrations that I'm sure Dennis has that I do, 5-7 years ago,
I don't.
5 to 7 years ago, most insurance companies and hospital systems, when they negotiated with each other, they did it for 3-year contracts. Well, it changed, and now it's down to 12 months, which is why when you hear these conflicts between insurance companies and hospital systems, it's inordinately frustrating, because the moment they do a deal, they're working into the next deal. So that's why when you hear sometimes where you see these letters flying back and forth between providers and hospital systems, insurance companies about, well, we're going to terminate it, it's because everybody is short in time frame. And so it's just kind of one of those. We pay attention to it very carefully. And usually if we know something's coming up and there's going to be a potential permanent problem, then we will then identify that to whoever the affected employers are and say, do you want to stay where you are, or do you want us to try to move you and put you in a different structure to make that work? Currently, we have, using Salem Hospital as an example, Salem Hospital is defined as out of network for Regions Blue Cross Blue Shield. So if you're a card holder in that area, you can go to Salem Hospital, but it's not considered in network. So you can pay a lot more money to go there. We're very close and pay attention to that, to put that together. Okay, so back to the rules. So for anyone who's already got insurance coverage in place and you've got 5 or more enrolled, you would send that information to us. It would go to Dennis and take a look at it, get it over to us. We'll run the quote, and then we come back and give you on that list that I told you about, the 15, 17 plans, you would get rates on every single one of them. And then you have consultants like Dennis who will walk you through it and say, okay, the plan you have today is a $1,000 deductible, $8,000 out of pocket max plan. Maybe you want to look at this. You know, did you ever look at the HSAs? Do you want to look at doing something like this? Do you want to change it and kind of do something different? So that's where the consultants come into it, to build it in, and get it done. Okay, tons of info. Sorry to make
What
it
about
short.
under five?
Pardon?
What about the employers that have less than five? Do they have to wait till October or something? Or-
No, good,
Okay.
thank you, great question. So question is, does anybody have to wait? No, you can start this program at any time. You can end this program at any time. All that happens at that point, let's just say somebody says, okay, I know I've been told that I have Providence and I'm not going to be having my coverage as of January 1st. If you wanted to start October 1st, you could run October 1st to October 1st. So you can move forward to do that at any time. You could then say to us and say, okay, well, then at some point, could I change back to January 1st? Yes, you could. The only thing that happens is if you decide to make a change at that point, you may lose the surplus because the surplus runs on a 12-month basis. So therefore, you kind of, once that gets set, but if you're tracking it, let's just say that whatever you're even, if there's no real surplus, then it's irrelevant. It doesn't matter. You could make that move at any time and what you want to do. So, which we have. I mean, we have ongoing communications to all of our employers, to work with them. We'll also say, well, it doesn't look like I'm going to have any change, but this is still a better program for me than something else. So I want to be able to do that from there. Other questions?
But do you have to be a business, the Bend program, you had to have 2 employees,
Yes.
W-2s. Do you still
Thank you.
have to have 2?
Thank you. We have to have 2 enrolled, but one of those can be an owner. So the requirement is we have to have at least 2 enrolled. And one of them has to be a W-2, but that's basically the same with the small employer roles. Because with small employer roles here in Oregon, you have to have one W-2 in the coverage. Now, that said, good example. So I had a phone call about a year ago from an outgoing vice president at Nike. And so he had an issue of being able to take a look at, I want to get coverage because I'm leaving and COBRA's too expensive, so I want to get this done. So because he travels a lot, it was then a question of, well, you're not going to have the coverage you want in the individual market. But because I know you and I know what you're going on, here's what can be done. So I said, have you filed a consulting company? Yes, I have. I said, okay. I said, you got a daughter in college. I said, you're paying daughter. I said, to go to college, right? He goes, well, yeah. I said, okay. I said, I want you to convert daughter into the money that you're giving her. I want it now to be a salary.
Gotcha.
She became a W-2, family gets covered.
So you make
And
an
on the group
employee,
side,
you make somebody an employee.
you make somebody an employee. And so under the small employer rules, and we operate by the same set of rules. A spouse of an owner cannot be, or someone with an ownership stake cannot be the W-2.
Mhm.
But a working age child could, a relative, you could convert somebody who's a 1099. You can, I mean, there are lots of ways to make this happen. I would urge you to look at different ways to be able to be creative. I know that we have members that you have that are here that been part of this, that we've had these long going conversations. Because there are also possibilities of us being able to add 1099s into the program as well, and then bring them in. But of course, they have to qualify by having that one W-2
Mhm.
to get involved. So we operate exactly the same way that the small employer marketplace does.
And they can be part-time.
They can be, the rule right now is we want 30 hours
30
per week, 30 hours per week for a full timer. So,
Can I make this once?
Yeah.
This comes up once in a while, as he's explaining about the level of funding and, if there's a surplus. What happens if there's no surplus? Do you have to pay more? No, it's the same as every other insurance plan you've ever been on. You have $1 million claim, you're still not paying anymore.
right. Yeah, good point that Dennis brought up, because because of the way that the level funded structure is built, that set of rates stays locked for the 12 months. And so even if somebody has a major catastrophic event, a stroke that costs $250,000, you're still only paying what you're paying. It's just that you'll then they'll adjust for it when you get to the renewal place. Every group is rated on its own. So in other words, you're based on your demographics, which means that younger groups don't get punished against older groups. Now, older groups, will you pay more? Absolutely. but, because it's all based on the sliding scale of demographics. But younger groups, I'm sure Dennis would reiterate this. We have seen that in association programs where they actually punish the younger groups. And when what happened is the younger groups would leave because they could find better, cheaper alternatives. So in this case, because we do each group on its own, but you're the collective of all of you together, then that's how you protect each other. Other questions? Anything from the chat?
I have nothing in the chat.
If somebody brings a W-2 employee on, you said the 30 hours, is there a minimum payout amount?
Yes, is it the same way that you do with small employers? So you have to put at least 50%, you have to pay 50% of the employee amount.
Okay, sorry, I mean it from an income standpoint. So if somebody brings in a W-2, how much do they need to pay them? Does that make sense? Is
Oh,
there like
I
a
got you.
minimum
The
amount?
wage.
So you mentioned like
Yeah,
the college
just minimum wage,
student,
just minimum wage.
minimum wage,
Just
okay.
Minimum wage, yeah.
Can I ask a quick question? Sorry, my video is off. I have a small business in town. I am the majority owner, but the other owner, we're both W-2s. We have an S corporation. How does that work? Do I need to pull in an additional W-2 employee
Yes,
able to be eligible? Okay, and that employee needs to have 30 hours a week
yes,
in order to be eligible for any of this, yes?
yes,
Okay.
in order to start the program. And let's just say two of you are a small employer and you only have that one full-time employee with you, but the employee leaves after a month. Well, you're still okay, because once it is done and you're enrolled, it stays for the 12 months, even if that employee left. But when you came around to renewal, you'd have to have that W-2 employee at that time to have
Got
you
it.
involved.
Or a different
And
one, right?
tell me again
Or
how it
different-
works.
yeah.
Oh, I'm sorry, excuse me. Can you tell me again how it works with a child, a college student? Because I do have that, and I could put her on. Gotta
Sure,
leverage
it works.
family members.
Yeah, it would work exactly the same way. So as long as that you were converting the money that you were handing to the child for college, then you convert that to a salary. And then by doing that, that person becomes the W-2. And then they're covered in that way. And to be honest, and I would let you know that when you do bring on youngers, matter of fact, you all can't, you can see Jane Venden is here.
Done it for years.
She's done it for years. They've got two sons, and
Twins.
when you look at, you have the family where you're rating it, where you say you're rating it just on dad. The moment you bring the boys in, the price drops, because again, the rates pull down for youngers and float up for olders.
Okay, and you do have a question on here. Did you say there was a different process for small employers with less than 5 employees to obtain quotes? I currently have 3 full-time employees, myself as owner, and we have a group plan on MODA.
Okay, yes, for us, if you are going to take a look and get a quote, we will send you a form that is a health statement form. And so each person fills out the health statement form. It comes to us, it stays generic with us. And then we then send it on to United Healthcare. They then run it through their system, and then they'll come back with rates to get that structured. If you are 5 or greater enrolled, then you don't have to do that. You just send us the regular census information, the demographic information, and your plan information, rate information, and then from there, we'll go ahead and build it, go from there. But given where the agreements that we have currently with United Healthcare, we're still working on them. But any group 4 or less requires the health statements.
And that second employee just needs to be there for a month out of the 12 months.
It's as long as they need, however that is, whether it's a month or it's 2 months, it is what it is. Because we've had that happen. We've done so, and it's the same with the small employer group. So you come in, you get enrolled, was there all of a sudden that person quits, terminated, whatever that is, the coverage still stays the same. But you have, when you get around to the renewal, then you still have, then now you've got to bring a W-2 on to make that happen.
Rick, is the minimum amount 1 month, right? For that W-2 or?
Well, it normally is
Do they-
because that's the billing systems that the insurance operate by. I mean, they'll bill you on the first of a month, And then you have the coverage in place for that 30 days. But let's, just say that for whatever reasons you did it, you brought somebody on and midway through that month, they quit or left or did whatever. Your coverage is still in place. But you would have already paid for that person for the first 30 days. Now, the other thing that I want to kind of make sure is kind of what we call the red and blue flashing lights. Because of the level funding with small employers, meaning the ones that are 20 and below, what we call the COBRA zone, there is no continuation for this. In the small employer market, there's something that's called continuation, meaning if I'm in a small employer group and I leave or I get terminated, whatever, I have the rights to be able to stay on coverage, but I'm paying 100%. In this structure, you can't, because once you move from the fully insured space over to the level funding space, that option goes away. So it's just something that you work with us, Dennis and the others, that if that happened and it's like, well, this person wants to leave, what are their options? We will then try to work with them, or we'll bring somebody else in to be able to help. The other thing is that we will also work with you if you have Medicare eligible employees, because in many cases, there are times when Medicare is actually less expensive than it is to put somebody on the coverage. So we have Medicare experts who work with us all the time. So as we're going through these and looking for people who are Medicare eligible, we will have that communication with our employers to say, here may be why. And then we're one step removed, meaning our Medicare agents are not part of our official agency. So they work with the outside, they're working directly with that employee. And then that way we then communicate with them and communicate with the employee and communicate with the employer. Because under federal law and state law, an employer cannot incentivize someone to go to Medicare, but the employee can choose to do it on their own voluntarily. But in many cases, they're not educated. They're not told that, oh, by the way, you're paying, let's say your portion of your part of the premium is $200 a month. Well, and the employer's paying $500 a month. Well, you've got a lot of money that's there. And in reality, that person, if they were only paying for a Medicare premium in their Part B, might be about $250 to $300. So now, because nobody really understood the financial dynamics of that, by having the communication in both places, with the Medicare agent talking to the employee and the consultants talking to the employer, you get everybody on the same page to make that work, and makes it work better for everybody.
Okay, we do have a comment.
Okay.
The rate is determined by each individual business. In other words, the census rate is rated by the ages of the employees only.
That is correct.
Okay,
That's correct. Any dependents also factor into that.
okay.
But in most cases, it's predominantly based on the employees, not on the dependents. Dependents do have a certain effect, but not anywhere near as much as they do if you have youngers that are able to be on the coverage as employees.
Great.
Other questions, gang?
I have one if nobody has one.
Yeah.
Just curious, have you seen folks who partner up just to have like an entity structure so they can get two employees under one entity?
Yes,
You've seen
yes, we have seen that too as well. And then we've, James heard me talk about this a number of different times. We've encouraged people, especially if you're in specific places. Let's say you're self-employed and you have an LLC, but you've got friends who are also self-employed and they have LLCs. Together, you have the ability to craft an LLC that allows you to be able to participate. The only thing is you gotta have a W-2. Somewhere within that mix, there has to be a W-2. So there are ways to bring those kind of pieces together. We have it, we do a lot with the agribusiness area as well. We do it with ranchers. So you'll have a collective of LLC. You have 10 ranches because they all provide lamb or beef to a particular collective. Well, as they're all part owners through their own independent LLCs back to the main LLC, which is the main company. As long as there's a W-2 to that LLC, they qualify as a group. And when in doubt, ask. That's the one thing that I think that you're hearing from us is we're pretty open. We've both been around, a long time doing this, all the gray hair. And so we want to help you find the options that you need to get through this. And if the options aren't right for you, we'll tell you. I mean, if we think you need to be better to be in the small employer market, we'll tell you. And we're more than happy to help you to get in that space. We hopefully built this to help the chambers expand and do what it is that they want to do to be able to provide this on a community basis, to where you're working collectively, to make this better.
All right, that's great. If we don't have any more questions online, it looks like we will wrap up, but we do have handouts. We will send those to you if I have your email information. We will also be putting this in the chamber newsletter as well as the link to the recording. And we will do this both as a YouTube and as a YouTube podcast. So you can just listen to it if you want to listen to it.
Liz, can I
Yes.
just say one last thing? This is Jane Bendon, and I've worked with Rick for over 10 years. And it's been an incredible experience to see how he has managed this for us. And I think it's a real gift to the chamber. It's huge right now. It's really huge. And we've done that, he's helped our business for the last 10 years. So super grateful that the chamber's talking to you, Rick, and grateful for all your support.
Great, thank you. And if each of you could tell us your contact information, we will again type that up, but if you want to go ahead and put a phone number or an email address that's on tape.
Sure. If you want to contact me directly, my email address is rick, R-I-C-K, @ AHP Advisors, AHPADVISORS.com. What I would do is encourage you that if you're really interested in wanting to get a quote, contact Dennis. So get to Dennis. I mean, you can ask questions of me too. So just don't, I'm not trying to defer it. So, but if you really want to get started in the process, I would have you work with Dennis.
Okay. Dennis, yours?
My name again is Dennis Warneke, and my email is a little bit difficult, but it's Dennis@Warneke Group. So that's DENNIS @WARNEKEGROUP.com. And my cell phone and only phone I have is 503-816-1313. So you can call or text me there. Thank you.
Great. Thank you.
Thank you for allowing
Is
me
there
to do
anything
this.
else we need to know?
Nope. I
Okay,
think we're good.
and thank you very much for all of you online. Thank you for those of you in person, and we will turn this off.
Thank you
wait a
so
minute.
much for all of this
There was
information.
one other question here. How do we get the employee questionnaire? Is that contact Dennis?
You can contact Dennis, you can contact me.
Okay.
We both have them. So,
Great. Thank you.
Thank you so much.
You're
you're welcome.
All right.
Thanks, everybody.